And the number 9 is, after preparing a trial balance, it was found that a check $300 received from Oliver had been debited in Oliver's account and credited in the bank account. No other error were found. Which statement about the trial balance before correcting the error is correct? Number 1, option A option is correct. The credit column was equal to the debit balance. Because 300 received from Oliver, which was credited, and bank was debited. So when we will opposite entry, Oliver's will be debit and bank will be credit. It means this transaction will not affect on the trial balance. Both debit and credit columns will be the same in the trial balance. So A option will be correct. Nor debit balance will be exceed nor credit balance, and vice versa. And number 10 is, Ali's financial year ends on 31st March. During the year ended 31st March 2019, Ali paid wages of $42,500 on 31st March 2019. $1,400 wages were accrued. Which journal entry recorded the transfer from the wages account to the income statement on 31st March 2019? And B option is correct. Income statement to wages, 43,900, 43,900. If he accrued wages $1,400, expense and income will be recorded in the particular year in which they are earned or incurred. So 1400 will be incurred in the particular year, so it will be recorded in same particular year in which it is incurred, not in the next year. It will be liability that will be paid in the next period but recorded in the same period in which it is incurred. So this amount 1400 will be recorded in the same period in which 42,500 will be recorded. And 11 number, a trader created a provision for doubtful debts. Why did he create his provision? Number first, to ensure that money was available to cover bad debts. Number 2, ensure that the current assets were not overstated. Number 3, to ensure that the matching accrual principle were followed. And number 4, to ensure that the profit for the year was not overstated. And number D is correct, 2, 3 and 4. And first option is not correct, number 1, because to ensure that the money was available to cover the bad debt. This is not correct. And number second, to ensure that the current assets were not overstated, because the doubtful debt is from the account receivables. Doubtful debt decrease the provision for doubtful debts, decrease the account receivables, that is in the head of current assets. So current assets will be decreased, and with provision of doubtful debt, it will not overstated at the end of the year. And number 3, to ensure that the matching accrual principle was followed. So doubtful debt is expense, so the expense are recorded in the same year in which it is incurred. And number 4, to ensure that the profit for the year was not overstated. And when we will not provision for doubtful debt, So this is expense, and when expense will decrease, the profit will increase. And in the absence of provision for doubtful debt, profit will be overstate. And number 12, which items is revenue expenditure for manufacturer? Number A is buying new office equipment. This is capital expenditure. Extending the factory, this is also capital expenditure. And purchasing motor vehicle, this is also fixed asset purchasing. And number D option, repairing machinery. This is revenue expenditure, because purchasing machinery is capital and repairing machinery is revenue expenditure. And number 13, an item of revenue expenditure was treated as an item of capital expenditure. What was the effect of this error? Number A is correct. Number A option is correct. Profit for the year overstated, because the revenue will be treated as expense in the profit and loss statement of the income statement. And non-current asset overstated, and when we will treat it revenue expenditure, the non-current assets will be overstated, and when of expense will decrease, the profit will overstate. And number 14, what caused computer equipment to depreciate? And number B option is correct, economic reason. And number 14 is, on 1st January 2017, Wayne purchased a motor vehicle for 8,000. He decided to depreciate it using the diminishing reducing balance method at 20% per annum. Which journal entry did Wayne make on 31st December 2018? He purchased it on 1st January, and in the and at the end of the second year, what will be the journal entry of depreciation? Income statement to provision for depreciation, 1280. How? In the first year of depreciation in 2017, 8,000 multiplied 20%, the 1600 will be depreciation in 2017, means in first year. And in the second year in 2018, the depreciation will be 8,000 less 1600, and net book value will be 6,400 multiplied 20%, and that will be 1280, 1280. This will the depreciation amount in the at the end of the second year, and this will be provision for depreciation in the second year. And next is 16, a check received from D. Pawson, a trade receivable, was correctly debited to the bank account but was credited to the account of P. Dawson, a trade payable. What was the effect of correcting this error? Trade receivable will be decreased and trade payable will be because we have received from trade receivable, check from trade receivable, so it will be decreased automatically, and we have to decrease the trade payable because we have wrongly trade payable increased, so it will be decreased.